Let me also welcome in the management of JSPL joining us today on a whole host of factors. We've seen a surge in iron ore prices, steel spreads have been compressing. So will costs increase? Do we need any other safeguard duties? Naushad A Ansari is joining us, the CEO. Thanks so much for being with us this morning, Naushad. Now, steel spreads have come under pressure of late due to a whole host of reasons. Are you seeing compression on this front?
What we are seeing is that the international iron ore prices are going up substantially, and we know the reasons for that because the Brazilian supply, there has been some issues with air. As far as coking coal is concerned, by and large, it has remained okay. But what really has happened is that the steel prices are under pressure compared to the last quarter. In this quarter, they are under pressure, and that is why you are seeing a reduction in the this steel spread, which is absolutely correct. What is really going to happen is two things which we foresee. Number one is that the liquidity problem which is there in the country as of now, for the last few months, we can see that the liquidity is an issue. We expect that all the initiatives which are being taken by RBI and the government, we expect that liquidity will become much better in the coming few weeks, and that should certainly help the matter. So despite the season which is going to be a monsoon season, and typically the construction comes down a little bit, but we do expect that once liquidity improves, the overall the prices would remain at the same level. So I don't foresee any further compression of the spread which we are talking about. There's no further reduction in the spread.
Okay, so iron ore prices, like you said, they've zoomed. You have very limited iron ore integration. What's the kind of rise in costs that you've witnessed?
So you see, for every ton of iron ore, for every ton of steel, you require close to about 1.7 tons of iron ore. So let us say if the iron ore prices go up by 500 rupees, then we are talking about 800 rupees is the differential for the steel. So that's the way it really works out. So, and recently which you have seen, obviously the international prices have gone up. The local prices fortunately have marginally increased. It is not all that high which has really gone up. So for example, if it has gone up by, let's say, 150 rupees, the impact of that will be something close to about 200 to 250 rupees. So that's the kind of number which is there. But by and large, as I said, that we expect that once the liquidity becomes much better, I think this impact will be manageable.
Have you undertaken on a price hike to counter the rise in costs?
So the market is such that even if we want to do that, it may not be that easy. So we had looked at this possibility that to increase the prices and so on. We do see that because of the liquidity issue, again there is some resistance in the market, but I think the important thing is if we are able to maintain the same prices which are there prevalent in the last month, I think that should be reasonably okay. So that's what is really happening. Most people are able to manage keeping the prices at the same level as last month. And I think, as I said, once the liquidity improves, then suddenly there will be a possibility of increasing the prices to counter this additional cost.
How is demand looking for India? You have seen a good ramp up on orders from the railway sector. Any more such orders, and what is the order book like there?
So as far as railways is concerned, I think they have large appetite, and we also have good orders from railways thanks to Indian Railways and RVNL and all the other companies who have favored us with their orders. And we are supplying as much as they are able to take. We are able to supply. We have almost a capacity of close to about 50,000 tons of rail supply, and we are trying to make sure that we supply somewhere closer to that, or whatever is that these companies can take. So that's a very good pickup which is there compared to the earlier time. And in other areas, for example the infrastructure area, etc., the good thing is that we are not allowing our inventory to go up. We are able to sell all whatever we are able to produce at the kind of prices which are prevalent, without any reduction in the price, any appreciable reduction in the price. So that's a good thing which is there. And the other area where, as I expect, that all the projects which are there, some of these projects were put under hold because of some state elections, etc. Now I believe that the actions are already being taken by the state governments, the new governments, etc., to start the new projects and also to give clearance for the older projects. So I think it's a matter of weeks before the demand really picks up much more than what it is. But in any case, even in the present condition, our inventory is not really going up. It's only remaining for about let's say 5 days or so.
Right. Mr. Ansari, so with global growth slowing down and the outlook not looking that great here off, would you be worried about steel prices going lower as well?
So you see what's happening if the iron ore prices continue rising, and we don't see that immediate reduction. Of course, I mean, today we have heard this news that Vale has won one particular case, and I think 30 million tons of iron ore should be very soon available in the market. So if that happens, we would imagine that there will be less pressure on iron ore prices. In terms of it should actually come down. The iron ore prices should come down. And if that happens, I would imagine that profitability would be remaining okay. As far as international prices coming down is concerned, I think it is already reached a fairly low level. If you look at the HRC, etc., that's sub $500 kind of numbers which are there. I do not believe that it is going to go down anymore. It is already reached that level from where it is actually going to go up. So in the coming few weeks, our expectation is that the prices will certainly rise, not really go down at all.
Right. So are steel import levels worrisome then, Mr. Ansari, especially now that imported steel is once again making its way to Indian shores because, USA has upped its barriers?
So, this issue between US and China and the trade war and all, the duties which all the countries have put, for example, the US or EU or Turkey and other companies, they have all put this 25% kind of duty which is there, and that does have an impact, and it can redirect the imports within India. That's one worry which we all have, and for that the ministry is also very much alive to this fact. The Indian Steel Association and all the steel producers and other people, they have all made representations. Government is very actively looking at it, and I think very soon we will have a scenario where these can be controlled reasonably. I mean, they will take steps by which it can be controlled. So as I said, in the coming few weeks, our expectation is that on that front also there will be certainly some positive action taken by the government. And that should really be a good news for the steel industry.
Okay, there have been a lot of pre-budget consultations by various sectors. One ask from the sector is a 25% safeguard duty. Has there been any conversation around that? Would duty serve the purpose?
If you look at why this duty is important, in the current scenario, because of the US and China trade war and the other related aspects, if you see, US has already put a duty, EU has put a duty, Turkey has put a duty, some other countries have also put duties. So therefore, a lot of these markets are becoming more expensive as far as exports are concerned. And therefore, there is a real danger that these exports which normally would have gone to that market will get redirected to the Indian market unless the Indian government also takes that proactive step and make sure that there is a protection which is available for the Indian industries. Otherwise, there is a real danger that very cheap imports, maybe even substandard material imports can start happening in India. So therefore, this duty objective is to protect, as the name suggests, and to safeguard the industry from cheap and undue imports which are there. We must have a level playing field, and that is something which is important. So therefore, as far as the situation is concerned, the ministry is seized with this situation. The steel producers as well as the ISA, they have all given their inputs. All the data have been provided, and we are very hopeful that very soon some positive decision will come.
Right. So could you share an update on the Australia mines and what's the value on the books now? And can we really expect further impairment?
So, you know, this Australian mines, as of now, we already had an impairment when our results came in the last quarter. So there is no further impairment that we are talking about. And as of now, obviously, these mines are under care. And we expect that the new approval for the new mines should be available by September end or October, sometime in October. And then we can restart the one of the mine, and then we can produce. So for the moment, that mine is under care because of certain regulatory issues, and but then there is no further impairment that we are really talking about.
Okay, any deleveraging plans, Naushad? Any assets identified for monetization?
It is as you are aware that from a very high scenario of debt level, somewhere close to about 47,000 crore, we have already come down to 39,000 crore in the last financial year. And in this year, it is our intention to bring it down at least by 6,000, maybe closer to about 7,000 crores. So the target is to bring it down somewhere close to 33,000 crores. And a lot of it can be done based on our own EBITDA generation and so on, without really resorting to any deal, a special sale of any asset or so on. But then we are already working on some of the sale of assets, and if that happens, that will be over and above the targets which we are talking about. Some of the work is already ongoing, and but then right now we are not really in a position to also tell you. We also need to understand that the market today is a little down, and this may not necessarily be the best time to kind of dispose the assets. So we may have to look for the right time to do that.
Thank you so much for joining us this morning and talking to us, talking through those trends with us.